In the past couple of weeks, if you guys have been watching CloudMD stock, you'll notice it's shot up from around $1.75 per share all the way to $2.26 per share today. And you guys might be wondering, what's with this large move here? And I decided to dig into this tonight just to see what I could find out there as a reasoning for why the shares decided to pop up so dramatically. We're talking about like a 20% gain right here, a little bit over that. Now, one thing that we should look out for is also the other CloudMD competitors and see what their stock did. And one of CloudMD's major competitors, or I guess a company that plays in a similar space, is Well Health Technologies. So looking at Well Health Technologies for the past couple of weeks, we can see that there's a similar pattern, but just not as dramatic of an increase in price as CloudMD. But there has been an uptick in the past couple of days. And we can see that the uptick has also started to peak and it's starting to taper off and actually drop back down, which we're also seeing in CloudMD stock. So it looks like Well Health and CloudMD are following a similar pattern. However, CloudMD has had a larger uptick in price versus Well Health. So what gives? Why is there this huge uptick? Well, let's look into some of the facts or just some of the news that CloudMD has released. Before I jump into this video, if you guys are interested, you can sign up for Wealthsimple Cash and you can get some free cash for doing so. Wealthsimple Cash allows you to settle up, split bills, pay it forward, add a tip, pay back, as well as get paid. It's just a super easy way to send cash in Canada, and basically it's like the Cash App or Venmo of Canada. If you sign up today, you can get some free cash with the link down below in the description. The first thing that I want to look at here is CloudMD announcing the closing of one of the acquisitions, which happened on the 28th when we saw the first, or I guess the second major green candle, which led to another one the day afterwards and a continued price increase. And that's the closing of the acquisition of Oncidium. One thing that I noticed here is that Oncidium, when it was just the deal that they had, the terms of the acquisition, there was $38 million in common shares of the company at a deemed price of $2.30 per common share. So this was interesting to me because if we look at CloudMD, its shares basically peaked at $2.30 on just a couple of days ago. So I think that this is possibly this news release that they had reminded investors that they had a major deal just close for Oncidium. It was like basically over $60 million that they paid for this company, plus an extra $40 million in a performance-based earnout. So the fact that the shares were priced at a price of $2.30 per share, that might have been what propelled CloudMD stock all the way to $2.30 before dropping back down. And we also had a steep decline today. As you can see, this candle dropped all the way down to about $2.07. And maybe because we hit $2.30 and there wasn't much movement as well as low volume, there were some swing traders in doc stock and they decided to sell off today. And you can see there's a huge steep sell-off with a company with a lot of volume here. Also, looking at some other news here, we can see that CloudMD closed another acquisition just a few days before on June 24th. And this is the acquisition of Vision Pros. If we look at the terms of this acquisition, we can see that $30 million in common shares of the company at a deemed price of $2.75 per common share. So the fact that they released two pieces of news where the terms of the acquisition were at a share price higher than what CloudMD's share was trading at within the span of maybe a few days, 4 days or so, that might have been what propelled CloudMD stock all the way up to $2.30. Maybe not all the way to $2.75 because that's a bit of a stretch, but $2.30 seems reasonable, as well as that sort of lines up with a 200-day moving average. But one thing that I also want to note here about these two acquisitions, that they were actually announced a while back. So if we go to CloudMD's investor relations site and just look back to see when they actually announced these acquisitions. So April 8th, CloudMD to acquire Oncidium. And if we look at CloudMD's stock price on April 8th, it was trading at around $2.14. So they announced the acquisition and the share price was actually jacked up by a small premium to $2.30. If we go back and we find when they first announced the acquisition of Vision Pros, It was further back here. It was on February 16th. And looking at the stock price on February 16th, we're looking at a price of around $3.18 or $3.25 or so. So the stock price when they announced the acquisition was significantly higher. And we can see the price per share in that acquisition was actually down at around $2.75. So maybe the following few days, they actually signed all the term sheets, and then the share price or the shares were trading around $2.75 or so. And we can also see they announced a public offering, and this is when they were selling shares for about $2.80. And the CEO, he sold about 37% of his shares. On the same day that they announced the acquisition of Vision Pros, they also announced a bought deal offering of $45 million, where the CEO was actually selling some of his shares, around 30 to 40%, if I remember correctly. And after that, they upsized it to $55 million, and it was closed shortly after. One last thing that I want to point out here is the insider transactions for CloudMD from all the directors. So you can see here the CEO, Dr. Hamza, he sold his 1.5 million shares at $2.70 per share. Then pretty much right after that, he started buying them back on March 24th. He bought them back at $1.75, 32,000 shares, and then another 25,000 shares. On top of that, recently, he bought some on June 3rd at $1.83, and he continued to buy more through his Hamza Ventures, which is an indirect ownership, at $1.87 or $1.84. So you can see here the CEO has been buying back some shares as they have dropped significantly from his $2.70 when he sold off a significant portion here. We can also see here another director, he's been buying up shares as well. On June 7th, he bought 2,000 shares at $1.86, 1,500 at $1.87, another 1,500 at $1.84, and another 1,500 at $1.83. He also was buying some of the stock in late March after it dropped as well. He was buying around the mid $2 range as well as low or high $1 range. So really the two main guys who've been buying shares on the open market recently are Dr. Hamza as well as Mark Kohler, and they bought early June. So this is, I guess, a good sign, but also you can see that management was buying in the $1.80, but now the stock has jumped up to $2.30. So it will be interesting to continue monitoring SETI.ca to see if any of the directors continue to buy shares in June or even August after they've gone up to about $2.30. So the conclusion that I make from all my research so far is that CloudMD stock managed to reach the $2.30 mark before pulling back because of the news of Unsidium and the acquisition, where the share price in this acquisition was $2.30. And I think maybe these are short-term traders or swing traders who are buying in here, looking to make a quick buck, buying in here and selling up here. And they saw the price target, or they saw the price of $2.30. And when that price hit, they decided to sell off. And we may see some further selling off, maybe down to the 100-day moving average, where there seemed to be some resistance today where it bounced off of. I think that maybe in the short term, we could get to 275 if the market is optimistic. However, I don't think that, telehealth stocks or stocks in the healthcare or health technology space are hot right now, just because we're getting out of the coronavirus. And I think that people are looking at other sectors, just even looking at CloudMD stock over the past year and a half or 2 years, it's done phenomenally well for investors. So stocks can't continuously go up unless there's a business to support that, and the company is still continuing to lose money and they're not cash flow positive yet. So I think there's still a lot of risk on the table with CloudMD, and maybe this is why investors are reluctant to pay higher prices for the company. And some investors who bought earlier back on, they're actually selling out of their position right now. You can see that the heydays for CloudMD are also, over for the short time, because there was massive volume back over here. If you look at these volume candles, and in the recent couple of months, you can see the volume has dramatically tapered off. So there clearly is not as much investor appetite in the sector right now. So until we start to see volume return, which maybe this is the start of it, but I kind of doubt that, we won't see higher share prices, in my opinion. And we also see something similar for Well Health. However, there is a bit more activity over here, and Well Health's volume has been staying roughly steady. The one good thing about Well Health and why I like it over CloudMD is that some of their acquisitions that they've been doing, they're actually pricing the shares at $9.80, even though the share price is sitting around $7 or $8 at the time the acquisition was first announced. So if we look over here in some Well Health news, we can see that when Well Health acquired My Health, they actually had in the acquisition, the price per share was at $9.80, which represents a 38.1% premium to the volume-weighted average trading price of the company's common shares. When the acquisition was announced on June 7th, you can see Well Health stock was trading around $7.88, and it was actually like floundering in the low $7 per share. So nowhere close to $9.80. What's interesting about Well Health is that the first time they announced that shares were being sold in a public bought deal offering, where the CEO himself actually invested in this round of financing, the stock did end up shooting up to $9.80 or $9.84 to be exact. However, since then, the stock has not retouched those all-time highs, so I'm waiting for the stock right now to maybe recover and hopefully blast off again. One other thing on Well Health is that we can see here the analyst estimates where all these analysts are actually boosting their price targets or even reiterating their price targets, and they're all higher than the price that Well Health is priced at today. $12, $11, $11, $10.50, $13, $12.50. And all these price targets or price boosts were within the past 6 months. If we go over to CloudMD, we can see that the analyst reports here, there aren't as many analysts covering, and the previous analysts actually lowered their price target from $3.75 to $3.50. However, the day before, Laurentian increased their price target from $4 to $4.25. For CloudMD, all the analysts still also have a price target higher than where CloudMD trades at today. However, the lowering of a price target does not work in favor with the company, as it seems like Canaccord was a bit too optimistic with $3.75 and lowered it to $3.50. So when looking between Well Health Technologies and CloudMD, I still personally believe that Well Health Technologies is a better buy. I just like their management team a lot more and just the way that the company is moving in general versus CloudMD. However, CloudMD is also not a bad play because if Well Health does well, I'm sure that it will also drag up CloudMD to the upside. And likewise, if CloudMD does well, Well Health will also gain or benefit from the price increase of CloudMD. If you are to comment down below, please don't just give some sort of BS comment or just bashing on a stock with no real evidence or reasoning behind it. I want to hear some intelligent comments down below why you like one over the other, or maybe you like both, and what are your bullish cases for each one of them. I'll be throwing up 2 videos on the screen. If you're interested in those, you can check them out. If you're there, I'll see you there. If not, keep up the grind and have a great day.